Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 23rd of June. Starting off with the FTSE 100, and here we're trying to cling on to that rising trend channel from August last year. 7,500, the nominal level of that uptrend line, and we've been trading either side of it. Today actually that's become resistance. While we're below that, below 7,500, there's the risk of a move down to the floor of that April descending trend channel around 73.80. Probably want to see an end of day or a weekly close back above the 200-day line there at 75.38 to negate the potential downturn. But the 50-day moving average falling, we failed multiple times below that, which was not great for the end of May and this month. And we've also had that double RSI failure at neutral 50, which tends to be a leading indicator on the downside. So far, the FTSE behaving according to that 50-day line failure and also losing the 200-day line and the neutral 50 level. Moving on to the DAX, which yesterday was also trying to cling on to the uptrend line there from back in the autumn. We now have a couple of days below it, which isn't great. Also below the 50-day moving average, 15,900. Means that we're looking for at least a test of 15,700, that late May support, that bear trap low. And even if this market then heads higher after that. On the upside, end of day close above the 50-day line, then I suppose we're looking for 16,100 or so, which basically was the gap down area that we had at the turn of the week. RSI now well below the neutral 50 level, so the idea of a 15,700 test looks to be relatively nailed on. On to the Dow, and here we've had what has been basically a bull trap through 34,000 and the old April 2022 resistance line, but hanging on near enough to give the bulls hope and probably enough to give the bears hope as well that we're going to go down. 50-day moving average there at 33,600. RSI is still over 50 at 54, so that is a plus. And while we're above the 50-day line, still could get up to the top of that rising March trend channel around 34,800. Worst case scenario, which one probably has to factor in at the moment, is that we have to test the 200-day line again in late May support around 32,700. Moving on to Bitcoin, and here the best of the three markets at the moment, but we just lost that 30,000, the best of the 30,000 plus gains, trading either side of that number now. While we're above the late May resistance, 28,300, still looking for as high as 35,000 by the end of next month, which is the top of that rising trend channel from basically this time last year. Also a late June resistance line projection. On the downside, the worst we're looking at or thinking of is the 50-day line at 27,100. Moving on to the stocks, and Argo Blockchain still benefiting from the improvement in Bitcoin, etc., etc. And here, although we're off our peaks yesterday, which were around 12.9 pence, still above the 50-day line at 10 pence, and above that, still hoping for a move up to the top of that broadening triangle from March as high as 16 pence by the end of next month, but really need to stay above that 50-day line. Moving on to Audioboom, which has managed to warn the market today. Here we've had, we haven't actually had much respite. The best we've seen in the recent past have been rallies to the 50-day line. The last one was in March, and since then we haven't even been able to get near that, which was obviously a red flag. Falling trend channel there from March, the floor of the channel at today's low so far at 202. The problem is that we break the 200 level. If you look back at the previous history of the shares, there's not much in the way of support between £2 and £1.50, and that is the risk that we have here. On the upside, if there is any upside, one would be looking for an end of day close above today's 217.5 high to maybe reach towards the £2.50 area, basically splitting the overnight fall. RSI at 17, which is very, very low, but not low enough to negate the idea of a break of £2 and the shares heading lower. Happier situation in the form of Carclo, where we've got the shares in a rising trend channel from December, just breaking the 200-day moving average now at around 14 pence rather, and potentially hitting up to 18 or 19 pence by the end of next month, while we remain above the floor of the channel around 12.6 pence. Coro looks to be an improving situation, which may be some relief to people. Here we've got a V-shaped bull flag, rising 50-day moving average, and just nudging the 200-day line at the moment. 0.26 the first target, that resistance line, end of day close above 0.26. We're looking for 0.35 by the end of next month, and very happy with that V-shaped bull flag there, and the bounce for the RSI above the neutral 50 level. Only back below 0.19 and the 50-day line, really delaying the upside scenario for Coro. Been umming and ahhing about covering EQTech, but this stock looks as though it is making the first signs of recovery. If I can get the shares on the screen here, we're had basically what could be a bear trap situation from below the old May support there, about around 0.18. End of week close about 0.18, and then we're looking for a break of the 50-day line at around 0.2 pence, eventually up to as high as 0.28 if we can get a pretty quick break back above the 50-day line, and also the RSI back above neutral 50. It's only 48 at the moment, so a little bit more work there, but maybe an early bird indication of recovery on EQTech. On to Filtronic, which is building nicely. We've got the run up to a golden cross, 50 and 200-day moving averages both rising, broken that line of resistance from July last year at 13 pence, above 13 pence, looking for 18 pence by the end of next month. But that imminent golden cross, the real kicker there on that situation. On to Hydrogen Utopia, which has bolstered itself via medical cannabis, and here nice support for the shares above the 50-day line there at 7.25 pence. Above that, the initial target around 8.75, and then eventually, maybe by the end of next month, up to 13 pence, and a March resistance line projection, which is also pointing at the 200-day moving average. But the unfilled gap to the upside early this week, a decent bear trap gap reversal signal on that stock. Panther Metals is next, and second, I think it's the second showing this week, looking more and more encouraging by the day. Neckline resistance broken around 3.6 pence. Above that, looking for at least 4.3 at the top of that broadening triangle, descending broadening triangle from October. But that rising 50-day line suggests that hopefully we could be up to 5 or 5.5 pence over the short term, while we hold above the 3.6 pence area. Another stock on the move in a nice way is Pantera Resources, which I've also covered earlier in the week. Here you can see that our initial target there hit twice, around 7.6 pence. Above that, we're looking for greater glories as high as 12 pence by the end of next month, and maybe a bit more than that, given how strong the turnaround here looks with that V-shaped bull flag, which was also a gap close buy signal. So shaping up relatively well there for Panthera at the moment. On to one of the best stocks of the month, and it continues to celebrate that. Predator, bit of a bull flag here either side of our old target at around 11 pence, but at least while we're above 10.5, looking for a new leg to the upside, up to as high as 15 pence by the end of next month, backed by the run-up to a golden cross, 50 and 200-day moving averages both rising, so hopefully there'll be a golden cross buy signal over the next week or two, and the run-up to such crosses tends to be the strongest part in the cycle. On to Palatro, and what you can see here is that we had an initial target around 9.5 pence, and above that looking for as high as 15 pence by the end of next month. Unfilled gap to the upside to start this month. We've tracked sideways. That sideways consolidation above a rising 50-day line tends to be very strong, and so 15 pence hopefully while we hold above the gap area around 7 pence. Just a couple to go now. First one is Quadrise, and here very strong turnaround as well. Unfilled gaps to the upside, bear trap gap reversal, so that final low there around a penny would have shaken a few people out. Bullish divergence as well with that turnaround, so that's another plus to enjoy. And we're looking for the shares to hit the top of that broadening triangle from October as high as 3.2 pence, and maybe that could happen as soon as the end of next month, especially while we hold above the old March resistance at 1 3/4 pence. So that's a good sort of support, notional support area for the shares. Finishing off with Woodbois, we're gradually grinding higher over the recent past, still looking for that 0.75 zone target, and while we remain above the 50-day line around 0.52, but it's always a bit touch and go with this one, given the recent history of the shares with that massive gap to the downside back in April. That's it from me today. More updates over the weekend.